Good evening, everyone. Welcome back to the channel. I'm trying something new today. We'll see how well it goes. I just want to talk about the fact that the US economy is in a recession by the standard definition of a recession. And I want to address this because if you just Google economy is in a recession, you'll see all these articles about how we're going into a recession, but how we're not actually in one. And I started to feel like I was in the twilight zone because I was like, well, wait a minute. I mean, I actually majored in economics as an undergrad, and I'm like, I know this stuff. Like, what is there something I'm missing? Did something change? So I just Googled the definition of a recession just to make sure I wasn't completely crazy. So it says in economics, a recession is a business cycle contraction when there is a general decline in economic activity. Recessions generally occur when there is a widespread drop in spending. Okay, forget that one. Read this one here. A period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in two successive quarters, also known as two consecutive quarters. Okay, so with that being said, if we can agree on that, then we should also note that GDP numbers have dropped for two consecutive quarters, if you've been following it. So quarter one and quarter two both saw a GDP contraction. Here we go, right here. The proof is in the numbers. So you can see going all the way back to 2021, we were growing for all four quarters of 2021. Then look at 2022 over here where my mouse is, quarter one and quarter two. Now, granted, the contraction in GDP was less in the second quarter than it was in the first quarter, but nonetheless, that's two consecutive quarters of GDP contraction. Therefore, by definition, the economy is in a recession. So I don't know what everybody's missing when you see all these articles, like where Jamie Dimon's saying we may go into a recession next year. When you see Biden saying, oh, we might go into a mild recession, I would say to that, I mean, hello, we're already in one. So, and not that I'm rooting for the economy to do bad. Like, I want everybody to prosper. I want everything to be good. I'm not happy at all the way the market has done this year. I mean, a lot of stuff, even my own investments are down like 40% this year. It's been an absolute bloodbath. And what really infuriates me is, without going on too much of a rant, I feel like a lot of this is totally unnecessary. A lot of what we're seeing. Like I've said in other videos, we've really shot ourselves in the foot when it comes to not producing more energy domestically. We're tapping into our strategic oil reserve to artificially reduce gas prices before an election. And then we're immediately, and you can look this up, you don't have to take my word for it. You can go and look up, uh, this is the last month we're actually doing the tapping into the strategic reserve. So get ready for gas prices to skyrocket. If you're one of the millions of people that still don't drive an electric car, get ready for gas prices to skyrocket again once the midterm election's over, unfortunately. So, it kind of upsets me because if you go back 2 years ago, it just feels like, when the pandemic first started, we were in a recession then too, but it was over quick. The GDP started growing, the GDP grew by 30%, and by like the fourth quarter or the third quarter of 2020, even though we were down for the first two quarters. I mean, it seemed like everyone was quick to declare a recession then, but now it's like for some reason we want to tweak things and tweak terms and try to change the definition all of a sudden when the facts may not be convenient. So I wanted to make this, well, no live viewers again, but I would like to get some more live engagement going on this channel. And I wouldn't mind responding to comments and even having people come on and debate me, because I would legitimately like to have a discussion with someone who believes we're not in a recession. Now, here's the thing. I will say this. Does it feel like we're in a recession? Yes and no. And you know what? I just realized I'm not even sharing my screen again. I can't. This is like the third time in a row I've done this. I can't believe this. But anyway, let me just go over what I've already said with the screen share. I'm sorry. I can't believe I did this again. Okay, there's the screen share. Now you can actually see what I just said. So if you Google economy is in a recession, you'll see all these articles where Biden doesn't think we're in a recession. If we do go in one, it'll be very slight. You'll see other articles where Jamie Dimon says that we'll maybe go in one in the future. But no one seems to be saying that we're actually in one, like I was saying. Let me Google this one here. So this was the Jamie Dimon article yesterday. He said this is serious. U.S. likely to tip into recession in 6 to 9 months, and he surprises me more than anyone because, I mean, the CEO of one of the biggest banks in the world, he knows economics. He knows the definition of a recession. So, and let me just pull that up again since unfortunately, I wasn't screen sharing, just so we're clear. So, a recession, again, so you can see the screen, a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in two successive quarters. And again, I'll show here, which I thought I was showing, but I wasn't. Let me just make sure everything's okay. Yeah, we look good. Okay, so you can see 2021, we grew all 4 quarters of 2021. But if you go to 2022, look at this negative. Now you see the zero here in the middle. That's like the origin. The -2 means negative territory. So we dropped in quarter 1 and quarter 2. So that's 2 consecutive quarters of GDP contraction, which the definition again, a fall in GDP in 2 successive quarters. Now pivoting back to what I was saying before I realized again that I wasn't screen sharing. Um, does it feel like we're in a recession right now? Yes and no. And I'll tell you the yes part first. Go to the grocery store, go to the gas station, go out to eat, go anywhere, go buy anything, and you're going to find year over year costs are way up. I mean, in some cases, ridiculously higher than they were a year ago. So, from a standpoint of inflation, we're seeing record inflation. And from that standpoint, yeah, things feel a lot tighter. Now, for the no part, because like I said, yes and no. For the no part, a lot of people have still seen wage increases over the last year. A lot of jobs have come back that were temporarily gone during the pandemic, which was going to happen anyway. I mean, we were going to recover from the pandemic. It wasn't, it wasn't going to go on forever. So a lot of jobs have come back. There is such a thing called a wage price spiral, where the more raises that people get, the more money, the companies are having to pay them. Therefore, the companies are having to spend more money. They have higher overhead, because payroll, anyone that's in business, payroll is one of the biggest components of your overall overhead as a company. So the higher the payroll is, the higher a company's costs are, and then they suddenly have to go up on their prices because, if you to stay in business, you have to stay profitable. So if costs go up, you eventually have to raise your prices to cover your costs and to eke out a profit. So it's not like, there are some out there that think, oh, businesses are just being greedy. Well, not necessarily. Honestly, I think that businesses, at least most businesses, try to do the best they can and not really put it to the consumer as far as like price increases and stuff like that. Like I know where I am, in a lot of ways, like inflation could probably be a lot worse, but companies, especially places I go, have gone up on their price probably less than they might because they're trying to, not lose customers. They're trying to work with people. So it does seem, even though like there's been significant price increases across the board, it does seem fair. It does seem like there's no choice in the matter. So I don't buy the whole argument that it's like, oh, companies are just being greedy. Now, the weird thing, there are things that haven't gone up at all. It's few and far between, and it's not like normal items that you would normally buy. But there are things out there that actually haven't gone up at all, which is interesting. But I'd say 80% of all things have gone up, and most have gone up significantly. And again, and this may be an opinion, but like I say, the increase in energy prices is a significant component of that because that's a big component of transportation costs. That's a big component of really everything in the supply chain. So, when we make a concerted effort and we make a decision to not produce certain types of energy domestically or to not increase energy production, and then we rely on OPEC or we rely on importing oil from overseas, then unfortunately the costs of energy are going to go up. And we're seeing that now, not just with gas prices, but we're seeing it with higher electric bills, higher utilities across the board. Whether it's natural gas, coal, whatever is used to power most homes. Anything that I guess is not deemed clean energy, and unfortunately, clean energy is quite expensive too, and at this point, not as efficient. Like you're seeing a lot with like, especially electric vehicles. And most electric vehicles, I mean, until we have like solar plants out there, which again, at this point, the technology is not quite there for that to be super efficient at this point. I think it will get there. But right now, if you're driving around a Tesla, you're probably charging it up with power that comes from a coal power plant, which some people argue is dirtier than gas and petroleum. So that's an interesting tidbit there. But anyway, I'm kind of ranting a little bit here. So my answer: does the economy feel like it's in a recession? I say yes and no. This is a weird recession because the jobs numbers, and that's the next thing I'm going to go into, the jobs numbers have not really changed. We still have a very healthy labor market, and that's the silver lining of this. That's the plus side of this. So if I go to bls.gov, uh, and this is a great site to go to for a lot of data on like the labor market, consumer price index, things like that, all the boring stuff that you don't really want to probably hear about. This is a good site to go to. So the latest unemployment number came out October 7th, which was Friday. It's always the first Friday of the month. So there were increases in payroll employment of 263,000 in September, and the unemployment rate edged down to 3.5%. So that is a phenomenal unemployment rate. Now the labor market has been strong for years. So we've been on the same trend. Actually, if you look at the data, which I'll look at in a minute, ever since we recovered from the Great Recession in '08 and '09, it did take years for unemployment to come back down. But since unemployment has been back down, or since it started coming down, it's been on a downward trend ever since. And I think we bottomed out at like 3.5%, which is a very great number for unemployment. Any number like 4% or below is considered full employment for the economy. So, and if you go back to like 2009, 2010, we were almost at a 10% unemployment rate. So it's really great news that we haven't seen a spike in unemployment. I think the Fed is trying to drive that with the way they increase interest rates, because like I said, the increase in the interest rates is designed to, tighten things again so that we can start to get a control or a better handle on inflation. It doesn't seem to be working at this point, but eventually, there's going to be a drop in real estate. The housing market has already started to drop. A lot of home values are already 20 to 25,000 lower than they were at the peak just 4 or 5 months ago. So there's going to be a drop in real estate that's driven by the increase in interest rates, because as a mortgage becomes more costly, all of a sudden your mortgage payment is several $100s or thousands of dollars more per year because of the higher interest rate, which means, and house prices are already expensive. So it means, either less house you can afford or more money you have to come up with to get a mortgage. So that's going to drive a decline in real estate. And I do think that the unemployment rate won't stay at 3.5% forever. Well, I know it won't, in fact, because historically it's an abnormally low rate. And we'll look at that now. So this is, again, bls.gov, a very useful site. Now, what I'm going to show you here, so these numbers go all the way back to 2012, but you can go back further if you want to. You can select, I think, all the way back to like 1950 something or 1948. So you can see 2012 here, we were still at a relatively high unemployment rate. We were at almost, I think we averaged just over 8% for the year. We fell below 8% in September of that year, and we were coming down ever since. You see 2013, 14, 15, and then by 2016, we were back in the 4% range for unemployment, which is a very healthy number. And then 17, 18, and then by 2018, we came all the way down to 3.8%. By 2019, before the pandemic, we were rolling economically. I mean, we had one of the best economies we've ever had in a very long time, I think like 50 years. So yeah, we were down to 3.5%, which we're finally back to now. Of course, when the pandemic broke out, we saw like Great Depression level unemployment for about 4 months, and that's because the economy was locked down, which, in my opinion, one of the more dumb things we've done as a society. But I won't say too much on that. But yeah, the lockdown was not helpful. I mean, as far as working from home and all that, like I like that part, and that's still going on for a lot of people. But so you can see it took about, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. It took, so by the end of 2020, we were down below 7% unemployment again. And then in 2021, we stayed in the 6% range until May. Then we dropped to 5.8. We spiked in June by zero point 0.1, came down by a half a percent. And then we dropped back into the 4% range by last September. And then by the end of 2021, we had a very nice solidification of the jobs coming back as the economy reopened. So by this year, we've actually got a very healthy unemployment rate. But you can see on the chart here, you can see the significant spike that we had for those 4 months. But even though it spiked, it came back very quickly, actually. So we did have a brief recession in 2020, but really the market, especially the stock market, all the indexes, not only did they recover fast, but by the end of the year they were actually higher. By the end of the year 2020, they were higher than they were before the pandemic started. And honestly, like, and I can attest to this, like that was one of the best market runs that we've ever seen, especially the way, so the market dropped. I think the Dow dropped below 20,000 in March 2020, and it came roaring back. And not only did, like I said, not only did it add back everything it lost, but it surpassed, and it peaked almost at 38,000, and it actually dropped to below 29,000 for a day about a week ago, and it's hovering around 29,000 now. So we've almost lost 10,000 points in the Dow. But like I said, that was one of the best bull runs in the market, and really a lot of people were averaging, including me, averaging like 30% a year in stock market returns, which I greatly miss those days now. Now that point, when I answer the question, does it feel like we're in a recession? When I look at the investment returns, absolutely, it feels like we're borderline depression at this point. Like, I mean, 40% down. Granted, that's with like maxing out risk, maxing out. That's like, because all of my investments have like maximum risk, which is why in good years, why I can be up 30 to 40%. But in bad years, I can be down as much as 30 to 40%. That's just how it works. But, dollar cost averaging, right? So from that standpoint, like I said, this is one of the worst starts to a year, market-wise, that we've seen in at least 50 years, which is the next point I'm going to go into. So the market, so you see all the indexes are up, or they were up today, and the futures are up tomorrow. But if we look for the year, most of the indexes are down, like percentage-wise. The Dow year to date, we're down over 20%, 20.16% to be exact. And that's from where we were. See, we were 36,000. We were almost at the peak at the start of the year. So we've lost 7,000 points since the start of the year. And then S&P 500, we're down even further with that. So if we look from the beginning of the year, 25.43% since the start of the year, which is, I mean, we're approaching 30% down in the S&P. And then for the NASDAQ, and this is the futures, that's why it says like E-mini for the S&P. For the NASDAQ, NASDAQ's gotten hammered the hardest. We're down 34.21% for the year, because we were at the peak, we were at like over 16,000, I think. And you can see January 1st, we were at 15,581. We've dropped all the way to 10,870. And then as far as the small caps, the Russell 2000, they've gotten crushed as well. And the funny thing, like I say, in this market, nothing is immune. Everything is getting hit hard. Like cryptos, real estate's about to get hit. Real estate's kind of a lagging indicator. So is, by the way, another economic concept, employment, right, is always a lagging indicator. Anytime you go into a recession or whatever state the economy's in, employment is always the last thing. When you go into a recession, employment's the last thing to suffer. When you're in a recovery, employment is the last thing to recover. And you can look back historically. We saw that in '08, '09. We saw how long it took to recover all the jobs we lost in '08 and '09. So employment, like real estate, often are lagging indicators. And to prove that point with real estate, look no further than, again, '08 and '09, because real estate didn't bottom out till 2011. Even though the recession had been over 2 years before then, real estate bottomed out in 2011. So, and it took real estate a good 5 years to recover from there. And then real estate really just peaked out. And actually, during COVID, it had a tremendous run to where it hit new highs. And it was to the point the real estate market was so high that you literally had multiple offers coming in, you had bidding wars, and you had people buying houses from out of state without even getting an inspection. That's how hot the market was. So, but it took that long for the real estate market to go from trough to peak, basically. So real estate and employment are lagging indicators. And if I haven't put everyone to sleep with that, I'm going to go back to what the Russell 2000 did this year so far. So the Russell 2000 is down 25.73, almost 26%. So the Russell 2000 was over 2,000 points at the start of the year, 2,175 to be exact, and it's down to just below 1,700 at close of market today. So, like I say, it's a bit of a mixed bag, but by definition, unfortunately, yes, we are in a recession, and not to be the bearer of bad news, but I like to tell the truth, and you're not necessarily going to get the truth in the media because for some reason there's all these articles out as far as talking about how we may be going into a recession but not in one, which is very odd because I mean, when you have a textbook definition of something, I mean it's pretty clear cut. It's not like it's not really debatable. Like it's either it either is or it isn't. So yeah, we are in a recession. It's a bit of an odd recession because, like I said, the job market hasn't crashed, but yes, we are in one. And I like to tell the truth on this channel. So hope that was helpful. I'll try to do more of these in the future. Hopefully I'll be on time to the next one, and hopefully we can get more engagement going forward. If you like this, please remember to like, comment, and subscribe. And thanks so much for tuning in, and take care.